Hi, welcome back to the Tom O'Brien Show. I'm John Logan, filling in for Tom O'Brien. And it's almost like you're looking at Fox at night, and you happen to watch the main show there with the main guy, and Eric Boland's filling in, not missing any names, and it's just not the same. So, Tom, get back here. We'll see you back tomorrow. We're looking forward to hearing your voice again. All right. Andy Hecht was just on, and we were talking about commodity plays and just how some of these kind of worms are turning here, especially on copper. Gold's busting out again. That bodes well for some currencies and economies out there, mainly the Bovespa and the Columbia coal cap, like we've been speaking of. And we're looking at the Australian dollar right now. By the way, I'm showing up in the den. I'm showing a guest Bloomberg brief that I did about crude relative to the Bovespa, relative to the Colombian coal cap index, and that was about, what was that, February 18th, so a couple of weeks ago. And you know, the basis for that report was basically because of the impending possible commodities, you know, bottom here. And I'm not saying it's a bottom yet, but I mean, we started seeing some signs and gotten some wins on the board with the Canadian dollar starting to kind of relax a little bit, becoming valued again. The Australian dollar, the reason I have this up is because if we look at this technically, we've had higher lows on Navigator 3 times, lower lows on the Australian dollar, but in the midst of the Chinese meltdown of the Shanghai, and in the midst of the iron ore problems, in the midst of the gold and silver's kind of staying low, silver, my goodness. And a couple other things that, you know, Australia's one of those countries like Brazil, their economy relies on digging holes and selling what's in it a lot of times. And you know, this Australian dollar had really held up, in my opinion. So as we look at this, I'm showing a long-term chart. This has been one of my favorite trades, and now it's seemingly starting to kind of show the green shoots again. So getting back above 71.69 this week was a big time play on this. You know, I mean, first stop's gonna be 74.39, but I think this thing could really get some legs and easily see 80. But again, these things aren't going to go in a straight line, and the support and the possibilities around that 71.69, 71.86. We talked about that on the show. It kind of gave me a fake out last week, but again, as a trader, you've got to be willing to turn the rents the same way. Take the medicine, make sure the stops are in place, keep your risk reward scenarios in mind. And like something Kevin Hinckley said the other day, I was listening to the Thinkorswim Hour. His mentor, and again, this cannot be said enough. You know, his mentor is, you know, being on the floor, trading on the floor. What did his mentor tell him to make sure he always kept in mind? That he was able to come back and trade the next day. So, and that means if you got to take the medicine, take the stops, do what you got to do. But again, this is a long-term venture, and that's the same attitude that you got to have when you look at this as a long-term business plan. And a lot of folks, you know, when you look at trading, you know, it's, oh God, I'm going to push some buttons and the lights are going to flash and the guy's going to get the cheerleader at the end of the movie. You got to be looking at this as a long-term venture, and part of this, you know, process is sometimes getting stopped out. And that's what happened to me on this trade last week. It really was not great, but again, I look at it as, hey, you know what? I'm going to wait until we get back above these levels and play the game the same way. Now, this is a really nice win. So keep that in mind when you're playing these markets. And again, the Australian dollar you know, this is a rally state here. And looking at I'm going to pull up the Canadian here really quick. And this has been something that's just been languishing nicely, compressing down into these unfair lows around this 137.59 area on this currency. And again, when this currency comes down, it's becoming valued actually against the U.S. dollar. And then we had the breakdown. Now we're just we were in a hole for a while in the marketplace, drifting down. But how do you kind of gauge this right now? Since we had that breakdown again on the dailies, you really don't have any reasons to take this trade off on the short side. For a long time, this Canadian dollar was buy the dip, buy the dip, buy the dip. And then when we had some signs, you know, crude oil, kind of that portending attitude to kind of get itself together. If you look at this relationship over time, the Canadian dollar the ruble for that matter, relative to crude oil. And a lot of these things are starting to show the green shoots or the red shoots, depending on how you're looking at. Let me get this out of the way here. Depending on how you're looking at the valuation or the devaluation of these particular currencies and what cross pair, how's that regulated. So again, the troops are on the border and crossing when it comes to a lot of these particular instruments. So keep that in mind. I'm going to go back to, we're going to have, we got a real treat. We're going to have Basil Chapman on it in about 15 minutes. So you guys are in for a treat. So hang around. Basil is I mean, I listen to his show all the time. He's an incredibly good technician. I learn a lot from him every time I listen to it. And I also use, one of the things about TFNN, listening to this network, you guys are probably already aware of this if you've been listening for a while. It's nice to be able to, to slow your trading down and to get different perspectives and to wait for, I hate to use what Larry's doing, but the stars to line up, so to speak. He does a show right after me from 8 to 9, from 9 to 10 actually. And, listen to Basil and Andy's views, fundamentally speaking. When you have these things all on the same side of the fence, and then you've got some technical reasons, using maybe even some of the information that I put out in the mornings, our profiles, I like to look at things in a very black and white way. Is it okay to be long? Not okay to be short? Okay to be short? Not okay to be long? And then, if the Basils and the Andys and the Steve Rhodes and the David Whites and the Larrys of the world and Toms of the world are, kind of sitting on the same side of the fence, and then we're kind of breaking out outside of these profiles, I'm feeling very good that we've all made this concerted effort in the same direction, and that's really, again, sitting on the sidelines and waiting for those things to, not all of them to line up, but that's difficult sometimes when you're sitting there and you got the keyboard there and the lights are, all the screens are up. I know that's difficult to not do anything, but sometimes it's not what your broker wants to hear, but doing nothing is sometimes a trade in itself. So again, I think a lot of the guys on TFNN have been pounding the desk about these commodities changing tone, and you're going to get some offshoot trades. By the way, the currencies that we just spoke of, some of the indices, the Bovespas of the world, the coal caps of the world, the Shanghai's in trouble, and I think it's here to stay in trouble unless they do some more government rigging, but that's always possible. But you've got some decent opportunities out there now, and that's the way we're looking at it. We're going to take another break here, and when we come back, we're going to have Basil Chapman on.